My apologies for that. Had some things to take care of, which led me to pretty much focus on those things. I didn't have time to, give this weekly updates as well as post signals as I would have wanted. But let's just dive into it. So, gold finished or gold closed last week with a very decisive bullish, a bearish, decisively bearish uh, pin bar looking formation, as we can see from the charts here. It closed the weekly with a strong bearish rejection and looking as though for the time being gold will be dropping. Now, is that going to be a signal, a trend reversal? Well, we just have to wait and see, right? We can't say anything definitive at the moment, but going into next week's trading action, I expect strongly that gold will drop initially. Now, where is it going to get to? We're going to look at that. How long is that correction going to take place? Or how long will the correction be ongoing for? We'll also look at one or two scenarios in that. So let's get into the video. Now, definitely, there was a psychological resistance, right, at 3,500. And I also mentioned in some of my earlier videos that that was going to be the next target for gold, 3,500, and it got there. And from 3,500, there was a strong rejection, and it closed the weekly candle, as you see, kind of like a pin bar. So, what does this mean? Definitely, there has been that rejection at 3,500. It doesn't mean that gold would not in later down the line will not go above 3,500, but for the time being, it has been resisted by the 3,500 handle. So initially, I'm expecting gold to pull back. Now that pullback, now um, my first target for that pullback is going to be to maybe the $3,000 mark. On my chart, you can see it somewhere around 29.58. Between 29.58 and 3,000, anywhere around there. If I see a resumption, then I'll look out for that. Another one is from here down to the next target, which is 27.93. That will be my next target if the 3,000 or the 29.58 handle is broken. Then I expect it to be contained within 27.93 or within the 2800 handle. Now, by that time, I'm also expecting that the 50 period EMA would be somewhere within this region. By the time the market drops, the entire drop might not happen next week, even though next week will contain, key economic indicators, kind of like non-farm payroll and others, with others. But I don't expect this whole move to happen next week. If you look at um, the candle structure, if you look at the size of the candles leading up to this move, even if you look at the most active weeks, the market did not drop by that many or did not rise by that many pips in 1 week, and I don't expect it to drop by highest maybe 1,000 or maybe 1,500 pips in 1 week. I do not expect it, but then again, anything can happen. So these are our initial targets for the drop, looking at the market strictly from the weekly time frame, right? And this is, to me, in my opinion, this is the best time frame for you to get your overall direction in the market. Look at the weekly time frame and then take dressing from that. So now we've seen what is going on in weekly. Let's just quickly jump down to daily and then we'll look at 4 hours and see what is happening there. Okay, so this is what we see on daily. We can see that there's also a resistance turned support around 29.58. That is the main reason why we have a support there, right? So I expect the initial target to be 29.58. Now again, there's also a strong case for the daily moving average, 50 period moving average. I expect it to temporarily pause the market, although it might not. The market might not turn from there, but I expect it at least there will be some like a significant um, rejection when the market gets to that point. Just as we will see from the 4 hours as well, there was a rejection at the 4 hours. It looked as if gold is going back up, but I think it's going to be short lived. Once the market opens next week, gold will resume the sell. So this is from daily. Let's look at our 4 hour chart. Let's just give it a while it loads. The rain has resumed, so there's that lag in the internet connection. Yeah. So we're looking at daily now, and from the daily chart, there's no what will I say? There's no indication from here. Day sorry, 4 hours is still in bullish territory, right? But like I said, I will expect that to cross into the bearish territory early next week. But on the flip side, if we see price continually stay above the 50 period moving average on 4 hours, I would cautiously change my bias back onto the to the upside. But like I said, that's going to be cautious. I would still expect sometime or rather sometime sooner or later on the 4 hour time frame to see the market cross into the bearish territory. It is still bullish for now, but I would expect that to change bearish early next week. So let's just look and see if we'll see anything on 1 hour and 15 minutes. 1 hour is already clearly bearish, but since we do not take much activity out of that, we'll leave that aside. We'll look at 15 minutes. 15 minutes close of business Friday was bullish. It crossed into bullish territory, but I always say I don't trade on Fridays and I don't trade on Mondays. From my experience, those are the two um, time frames where we experience the most, how will I say, whipsaw in the market, or the most. That's when this particular strategy is at its least reliable. Sorry, I want to go back to weekly. I clicked on daily mistakenly. Yeah, so we're back to weekly. So let's just look at that again. Our initial target, once 4 hours crosses into the bearish territory, we'll begin to look for sell signals down all the way to 29.58. Well, 3,000 first of all, and then 29.58. And if that region is breached, we'll continue to sell all the way down to 27.93 or 2800 thereabout. So that's our outlook for next week, and I hope You guys have a lovely trading week and a happy new month in advance.